We are starting with chapter of job and batch costing. Try to concentrate. We are manufacturers of, say, Coca-Cola bottles. All the units which are manufactured will be absolutely same. They will not be unique. All the bottles will be same, will be of same size. So what we do is we prepare Coca-Cola bottles in a batches of 100. Batch 100 units of Coca-Cola will be manufactured in first batch. 100 units will manufacture in second batch. And 100 units will be manufactured in third batch. And in a day, we will be manufacturing, or we will be having how many batch? 3 batches of 100 Coca-Cola each. We will be manufacturing 300 units per day. Is it possible to increase the number of batches? Yes. Manufacture 50 units per batch. Then there will be how many batch per day? 6. How 6? Total units, how many you want? 300 units per day. If you manufacture 50 in one batch, there will be how many batches? 6 batches. So 50 units in a batch. There will be how many batches? 6 batches. 25 units? 12 batches. If there are 25 units per batch, there will be 12 batches. And currently, there are how many batches? 3 batches. If you find out cost per batch, or your costing unit is a batch, then what you are doing is in the units where there are batches, or the units are manufactured in a batch, you will be having which type of costing? Batch costing. Sir, so there will be a new concept and new accounts and new overheads and new absorption techniques? No, everything remains the same. Just instead of finding out cost per one Coca-Cola bottle, you find out cost per batch and then convert it into cost per one Coca-Cola bottle. Is it possible cost per bottle in this batch and cost per bottle in this batch is different? The answer is yes. It is possible. Say this batch is in day and this batch is worked at night. The night wages might be higher, day wages might be lower. Then it is possible that per unit of Coca-Cola which is manufactured in batch 1 will be having a lower per unit cost as compared to batch number 2. But you are doing costing per batch. You are not doing costing per month. You are not doing costing per anything, but you are doing costing per batch. When the job costing is used, try to concentrate. See, what is my work? Try to concentrate. I do color outsourcing. What does it mean? If you are having office or home or any place which you want to get colored, your wall painted, I will be doing it. I will give you a quotation, you give me money, I will color your house. This is the service which I provide, right? Here I cannot do batch costing. I am in service sector, I will be operating costing, but I will have to do job costing. See, your house is 3000 square feet. I will give you same quotation or different quotation? Different quotation. With the as compared to a person whose house is say 10,000 square feet. Alright. His quotation might be different. So one 3000 square feet house and 10,000 square feet house. How I will be finding out my cost? I will be adding some profit and will be giving selling price. Selling price of this two job will be different. This two job or batch? Job. Here I am doing which costing? Job costing. Alright. So, sir, again the principles of costing will change? No. Just you are costing for one particular job. You will decide how much raw material is required, how much color is required, how much wages will be required, how much overhead will be absorbed. Sir, by which technique? The techniques which we have already learned in overhead or ABC chapter. We will be absorbing some overheads and at last I'll be adding some profit and find out selling price per job, and cost per job also obviously will be found out. This will be nothing but job costing. So, sir, what will be learning new? Will not be learning anything new in this particular chapter. All the points which we have done will be practically repeated. But either you will be doing job costing or you will be doing batch costing. Alright. See, there will be always this question. Sir, we should manufacture 100 units in one batch and do 3 batches per day. 50 units in one batch, 6 batches per day, or 25 units in one batch, that is 12 batches per day. Do you can you relate it with some problems that we have already solved? EOQ. There we were manufacturing or we were purchasing? Purchasing. But the concept was same, right? Whether to purchase 10 units at a time, whether to purchase 20 units at a time, or whether to purchase 1000 units at a time. Economic buying quantity or economic ordering quantity. It is one and the same. So we had done this. Now they will tell us how many units should be manufactured in one batch. Whether you should manufacture 100, 50 or 25. It will be economical manufacturing quantity or economical batch quantity. The concept will remain same. When the question comes, we will be also solving this type of question. In short, there will be no fundamental concept which will be introduced in this particular chapter. Let us try to solve some of the questions of job and batch costing. See 7.1. A factory which uses a job costing system provides the following cost data for the year ended 31st March. Direct material 9 lakhs, direct wages 7 lakh 50,000, profit 6 lakh 9,000, selling overhead is given, administrative overhead is given, and production overhead is given. You are required to prepare a cost sheet indicating various components of cost and profit. For the next year, the factory has received an order for a number of jobs. It is estimated that a direct material would be 12 lakhs and direct labor would cost 7.5 lakhs. What would be the price for this job if the factory intends to earn the same rate of profit on sales, assuming that selling and distribution overhead has gone up by 15%? Note, absorbed factory overhead on direct wages and administrative and selling and distribution overhead on work cost. We will be first preparing cost sheet, and cost sheet will be extremely simple. Let us prepare cost sheet. For current year, and proposed for next year, I will be preparing a separate column. Let us solve this. A factory uses job costing system. Direct material is 9 lakhs. Direct material 9 lakhs. direct wages is the 7,50,000. Total will be 16,50,000, which will be nothing but prime cost. What we add after prime cost? Factory overhead plus factory overhead. Factory overhead is, factory and production overhead is one and the same, 4,50,000. This will be 21 lakhs. This is factory cost. Plus administrative overhead assumed to be related to production. Even if it is not assumed, it will come at same place, which is 4,20,000. This will be 25,20,000, which is nothing but cost of production. Plus selling and distribution overhead, which is 5,25,000. I will be getting cost of sales. This is 30,45,000. Add profit, 6,09,000. I will be getting sales 36,54,000 rupees. They have not given me absorption rate, but they have given me some hint for proposed. What would be the price for this job if factory intends to earn the same rate of profit, assuming that a selling and distribution overhead has gone up by 15%? No, absorbed factory overhead on direct wages. So factory overhead is absorbed based upon direct wages. I am finding out the percentage. How much is the percentage of direct wages as compared to factory overhead? 4,50,000 is my factory overhead as compared to direct wages 7,50,000. You can even do multiplied by 100 to get answer in percentage. 60. So what does it mean? Factory overhead is always a 60% of direct wages. And administrative and selling and distribution overhead on work cost. So administrative overhead. Made up this. Administrative overhead is based upon work cost. Work cost is same as factory cost. So it will be 4,20,000 absorbed based upon factory cost, which is 21 lakhs multiplied by 100, which is 4,20,000 divided by 21 lakhs. 20% on factory cost. 20% on factory cost. This is 60% on wages. And normally this is not an absorption good rate for absorbing selling and distribution, but they say selling and distribution overhead is also based upon factory cost, which is 5,25,000 divided by 21 lakhs multiplied by 100. Can you give me the rate? 25% on which chapter? Overheads, right? This we have learned in overhead. There are n numbers of methods for absorbing the overhead. Your factory overhead is absorbed based upon wages. administrative and selling overhead are absorbed based upon factory cost. Let us see the another job or proposed job or next year job. Yes, it is next year job. The factory has received an order for number of jobs. It is estimated that direct materials would be 12 lakhs and direct labor would be 7.5 lakhs. This would be 12 lakhs. Labor would be 7 lakh 50,000. Total will be 19 lakh 50,000. How you will find out factory overhead? Can you help me out? 60% on direct wages. I will always absorb the overhead based upon direct wages. That is 60% on direct wages. 7 lakh 50,000 into 60%. 4 lakh 50,000. What will be factory cost? 24 lakhs. Administrative overhead will be 20% on factory cost. Will be 4 lakh 80,000. It will be 24 lakhs multiplied by 20%. This is 28 lakh 80,000. Selling and distribution overhead will be 25% on factory cost plus it has increased, has gone up by 15%. So selling and distribution I'll be finding out like this. It is the 24 lakhs into 25% plus 15%. 24 multiplied by 25%, that is 6 lakh plus 15 percentage, that is 6 lakh 90,000. My cost of sales will be 35 lakh 70,000. They want to earn same rate of profit as they were earning before. How much profit you were earning on cost before? 6 lakh 9,000 divided by 30 lakh 45,000. 6 lakh 9,000 divided by 30 lakh 45,000, which is 20%. You were earning previously 20% on cost as a profit. Now also you want to earn 20% of profit on cost. So 35 lakh 70,000 into 20%, which is the 7 lakh 14,000. Answer will be 42 lakh 84,000 will be your new selling price of this new job. This is C 7.1. We are going to see 7.2. XYZ has obtained an order to supply 48,000 bearings per year. So annual production should be 48,000 bearings per year. You got an order, so you will have to manufacture 48,000 bearings per year. From a concern, on the steady basis, it is estimated that it cost 0.20 as an inventory holding cost per bearing per month. That is, carrying is 0.20 per month. I don't know why it is given in month, but we can easily convert it into per annum. Setup cost and per run of bearing manufacturing is 384. This is the setup cost. which is rupees 380. Assume 365 days in a year. You are required to compute the optimum run size and number of runs for the bearing manufactured. Compute the interval between two consecutive runs. First, let me explain you this. Compute optimum run size. Optimum run size, optimum batch size is one and the same. Optimum batch size. Please understand first the concept. I can manufacture 4,800 bearings in one batch. In a year, I will have to do this how many times? 10 times. So I will have to set up one time, manufacture 4,800 bearings. Again, I will have to set up once again everything. Again, manufacture 4,800 bearings. And this I will be doing for how many times? 10 times. Can I do this? Do manufacture 48,000 bearings. And how many times? One time. Then I'll have to set up in 1 year how many times? Only one time. I will have to manufacture only one time. I will be manufacturing how many bearings? 48,000 bearings. I am assuming my machine is allowing that capacity. So I will be manufacturing 48,000 bearings and then I will be starting again machine once again next year. So how many setups will be there over here? Number of setup will be 1. How many number of setup will be over here? Number of setup will be 10. Here, do you understand? Setup cost is higher. Setup cost will be higher. How many number of setups you are doing? 10. Here the setup cost is lower. Setup cost is lower. But try to understand, here the setup cost is lower. But I'll tell you only one thing. How much raw material will be required? For 48,000 bearings, your 48,000 raw material will be invested at a time. Rather than in say 10 months, 12 months, once you start manufacturing the things, you will require raw material for 48,000 bearings. Will require more investment? You will be incurring more interest as compared to this? Here you will have to purchase at a time how many raw materials for bearings? 4,800 bearings, and here you will have to purchase raw material for 48,000 bearings. So your money will be stuck for 48,000 bearings raw material in this particular case. Here carrying cost will be higher. Here carrying cost will be lower. All right. It looks friendly to you. We have learned this somewhere. Yes. Where we have learned? Economic ordering quantity. There we were doing something else. We were purchasing the raw material. How much raw material was required per annum? 48,000. What was carrying cost per unit per annum? C. What was ordering cost? Here there will not be ordering cost. Here will be setup cost. Is it all right? So just for the information I am writing down this. This will remain my A. This will become my C. And this is what is O in that case. Both gives you same answer. Right? Suppose here the answer is 480 units or 480 bearings. The answer is 480 bearings. I don't know what is the answer, but the answer is 480 bearings. What does it mean? You will be manufacturing 480 bearings in 1 year. Then per run or per batch, I will be having how many bearings manufactured? 480. That is also termed as batch size or run size. My batch size is 480 bearings. Say Coca-Cola batch size is 10,000 bottles. What does it mean? In one batch, how many bottles will be manufactured? 10,000 bottles will be manufactured. So, to get the optimum size, I am now not going into detail of EOQ because we have done n numbers of times EOQ. But if you want to find out optimal run size or economic run size, or economic batch quantity. EBQ rhymes, right? So let us keep it EBQ, economical batch quantity, which will be is equal to under root 2A. Then what comes? O. Here O will not come, but what will come? S, which is a setup cost per setup divided by C, where A is annual quantity manufactured, S is setup cost per setup, C is same carrying cost per unit per. Let me find out first all the answers. A is directly available 48,000. C is per month. Per month will not do. Per bearing per annum is required. Per bearing per month is given. So it will be 0.20 multiplied by 12. It is 2.4. 2.4 is per bearing per. What does it mean? If you want to carry one bearing for 1 year, it will cost you rupees 2.4. It includes everything, interest cost, storage cost, everything. 2.4. Setup cost S is available to us, which is 384. I can find out economical buying quantity. Sorry, economical batch quantity. 2 multiplied by 48,000 bearings multiplied by 384 divided by 2.4. 2 into 48,000 into 384 divided by 2.4 is equal to, it is 3919.18. 3919.18. You cannot have this batch size, right? Batch size cannot be in decimal. You will not be manufacturing half bottle and then go ahead. What will be my batch size? 3920 bearings. Once again, so I will be manufacturing 3920 bearings per annum. No, I will be manufacturing 3920 bearings in one run or in one batch, right? Then they asked me number of runs for bearing manufacture. So number of setups or number of runs. 48,000 divided by 3920 will be number of times you will be purchasing. But here it will not be purchasing. Number of times you will be setting it up or number of runs. 48,000 divided by 3920. 12. 12.24. Compute the interval between two consecutive runs. So between two runs, how many days will be there? Or one run will be completed in how many days? Compute the interval between two consecutive runs. So first batch is starting today and second batch is starting after 10 days. The difference is how much? 10 days. How I will find out? How many runs are there in a year? 12.24 runs is for how many days? 365 days. Then one run would be taking how much time? 365 divided by 12.24. 29.82, which is equal to 30 days. Can anyone explain me what is 30 days? Except it is a time between two consecutive runs, because that we are finding out. Yes?
Manufacture 3920.
Exactly. But what is exactly 30 days? It is run time. Say today I will be set upping my machine, right? There will be all raw materials lying in the front of the machine. Everything will be set up today. I will start the machine. I will stop the machine after how many days? 30 days. One run will take how many days? 30 days. Alright. So, and the next run will start after 30 days. This is what is asked. Find out the extra cost to be incurred if the company adopts a policy to manufacture 8,000 bearings per run as compared to optimal run size. Alright. What run size we have suggested? 3920 bearings per run. What company wants to adopt? 8,000 bearings per. Two types of cost are incurred as far as this run size is concerned. One is the setup cost, another is carrying cost. How to find out? Number of setups multiplied by setup cost per setup will give me total setup cost. What is my annual requirement? 48,000 divided by 3920 will give me number of setups multiplied by setup cost per setup, which is 384. Sir, this is going very fast. No, we have already done it in EOQ, right? It is A divided by Q multiplied by O. I find out ordering cost. The same way I find out setup cost. What is the answer of this? 4702. How to find out carrying cost? Carrying cost will be 3920 divided by 2 multiplied by 2.4. Is it 4702? How come they are same? Economical ordering quantity, your ordering cost and carrying cost will be same. So economic batch quantity, your carrying cost and setup cost will be same. This will be 9404. This is not total cost of manufacturing. This is the total cost of setup and carrying cost. And if your run size is 8,000, your setup cost will be reduced. 48,000 divided by 8,000 multiplied by 384. This is 2304. And your carrying cost will increase. Will be 8,000 divided by 2 multiplied by 2.9,000. Total will be 11,900. And they are asking me how much cost will increase if I decide to manufacture 8,000 bearings in one run. How much cost will increase is 11,904 minus 940, which is rupees 2,500 will be increase in cost because of manufacturing in higher lot. Give your opinion. What is our opinion? You should go with economical batch size and you should manufacture 3920 units per or 3920 bearings per run. That's 7.2. And this is of batch costing. Component P is made entirely in cost center 100. This is name of the cost center, cost center 100. Material cost is 6 paisa per component. The component takes 10 minutes to produce. It takes 10 minutes to produce. The machine operator is paid 72 paisa per hour. So this is a labor cost. And the machine hour rate is 1.5. So this is your overhead cost. The setting of the machine to produce the component P takes 2 hours and 20 minutes. So 2 hours and 20 minutes is 2 hour and 20 minutes is nothing but your setup cost. On the basis of this information, prepare the cost sheet showing the production and setting up both total and per component, assuming that the batch of 10 components, 100 components and 1000 components is produced. So these three are separate questions. You need to find out the answer. If 10 components are manufactured at a time, then what will be cost per unit of this particular thing? If 100 components are manufactured, if 1000 components is manufactured, we need to find out the answer. First, let us do with 10 components. So let us do this. If we are manufacturing 10 units at a time, the material cost is 6 paisa per component. First, try to understand, we will be incurring two types of cost. One is setup cost, another is manufacturing cost. The material cost is 6 paisa per component. So what it will come in manufacturing cost? It is not a setup cost, right? So material cost is 6 paisa per component. So material per component is 0.06 rupees. It is 6 paisa. And for 10 units, it will be 0.6 rupees. That is 0.06 multiplied by 10. The machine operator is paid 72 paisa per hour and the component takes 10 minutes to produce. So one component takes how much minute to produce? 10 minutes divided by 60. This is hours. 10 minutes divided by 60 is nothing but hours because the rate is given per hour. And how much labor is paid? Machine operator is paid 72 paisa per hour multiplied by 0.72. This will be my per unit cost. This is my per unit cost. Per unit it takes 10 minutes, that is 1 by 6 hours multiplied by 0.72 is nothing but wages. What is the answer? 1.2? 10 divided by 60 multiplied by 0.72, which is 0.12, right? 0.12 is per unit. Multiplied by 10, because I am manufacturing 10 units in this particular batch. It is 1 point. And there will be overhead based upon machine hour rate. We have found out in overhead chapter, machine hour rate. Total cost of machine divided by number of effective hours will be giving us machine hour rate, and this will take 1.5 machine hour rate. Machine hour rate. How much time one component is taking? 10 minutes. But the machine hour rate is per hour. So divided by 60 multiplied by machine hour rate is 1.5. This will be 1 divided by 6 multiplied by 1.5, which is 0.25. And total cost of 10 units will be 2.5. The setting up of the machine to produce the component P takes 2 hours and 20 minutes. Please understand. During setup, you will require additional material. No. During setup, will you require a worker? Or the setup will happen automatically? No. You will require a worker whom you are paying 72 paisa per hour. Will your machine hour rate will be affected? Yes, we are assuming setup hours are productive hours. So machine hour rate will be also applied and wages will be also applied. So wages for setup. It takes how many hours for one setup? 2 hours and 20 minutes. It is 2.2. 2 hours and 20 minutes is how many minutes? 2 hours and 20 minutes is 140 minutes. Do this. 140 divided by 60. You will be getting in hours, and you need to pay 0.70. Similarly, machine hour rate will be applied at 140 upon 60 multiplied by 1.5. 140 divided by 60 multiplied by 0.72, 1.68. One 40 divided by 60 multiplied by 1.5, which is 3.5. Why I have taken only one time 2 hours and 20 minutes? 10 units is in one setup. In one run, I am manufacturing 10 units. So this 10 units will require how many setups? Only one setup. I am finding out setup cost total, manufacturing cost total. I want total also. Total will be multiplied by 10, right? 16.8 and 35. So this is where I am making a mistake. Please concentrate. This cost, what was the answer of cost? 1.68 and 3.5. is cost for one unit or one setup? 2 hours and 20 minutes is required for one unit. Yes or no? No, it is required for one setup. And in one setup, you will be manufacturing how many units? 10 units. So this is total cost of 10 units and not cost per unit, right? Why here the answer was coming per unit? Because this 10 minutes is for one unit. One component require 10 minutes. So there the answer was coming per unit. Here the answer will come in total. This is total cost for one setup. This will be 0.168 and this will be 0.350. Here the total cost, setup cost per unit will be 0.518 and this will be 5.18. This will be 0.43 and 4. I will be also finding out total 0.518 plus 0.43. 0.948 and this will be 9. If I am manufacturing 100 units, please try to understand. If I am manufacturing 100 units, this 0.06 remains same. This is material cost to manufacture 1 unit. This is wage cost for manufacturing 1 unit. This is machine hour or overhead cost for manufacturing 1 unit. 0.12, 0.25. Total cost will be 6.00. 12.0 and this will be 25. Concentrate. Sir, what to do about setup cost? What is this cost? 1.68. Cost per one setup, where whatever units you manufacture, but one setup would be costing you 1.68, 3.50 and 5.18. Are you getting it? Why? What is 5.18? Can you tell me? Setup cost for one setup. Whether you manufacture one unit, 10,000 unit, 10 units, 100 units, it does not matter. One setup will cost 5.18. Then, sir, here it is 100 units. 100 units in one setup. Here it is 10 units in one setup. 1,000 units in one setup. Setup in all the three cases, the remaining one only. Here the cost per unit will be 0.0168 and 0. It should be divided by 100. Yes, it is correct, right? 0.0350. This will be 0.051. And this will remain 4.30. This will remain 43. This will be 5.18. So 5.18 plus 43 will be 48.18. This will be 0.481. Is the cost reducing? Yes. See, per unit. What was the cost per unit before? 0.948. Now what is cost per unit? 0.4818. Alright. Just try to concentrate. I am doing fast in third case. Per unit manufacturing cost remains same. And setup cost per setup remains the same. This will be 60 rupees. This will be 120. This will be 250 rupees. And setup cost per unit will decrease like anything. It will be 0.00168, 0.00350, 0.0051. You can just total for the same. 250 plus 120. It will be 430, right? What is this total? 43518. And what is this? 435. Sir, cost is highest in 1000 units. Cost will always be higher in 1000 units, right? Total cost of manufacturing 1000 units will always be higher than total cost of manufacturing 100 units. You need to see per unit. Per unit where you are benefited. If you manufacture 1000 units in a lot, and this does not require any logic. Try to understand. You are considering manufacturing cost. Manufacturing cost per unit is remaining same everywhere. Is it remaining same? It is manufacturing cost per unit. It should be 0.43, right? This should be 0.43. This is 0.43. Manufacturing cost per unit is remaining same as far as manufacturing is concerned. Setup cost in total is remaining same. So if you manufacture more units in one setup, per unit cost will decrease. This is very obvious. So if you find out answer at 10,000 units per setup, your cost will more decrease. Is it all? Your per unit cost will decrease more as far as the total is concerned as you increase number of units. Can you tell me why? Then we have found out economical batch quantity. That is of no use. That is of use. In this question, one cost is ignored, which is carrying cost. You have considered carrying cost, not consider carrying cost, not consider. If you don't consider carrying cost, higher the number of units in your setup, more will be your benefit, less will be your cost, because you are not considering which cost? Carrying cost, right? So this is again a good question. What was asked way before in 1992. We are going to next see 7.4. The following data is presented by a supervisor of a factory for a job. Direct material rupees 120 per unit. Direct wages 4 per hour. Department A 4 hours, Department B 7 hours, C 2 hours, D 2 hours. So 7 plus 4 11 plus 2 13 plus 2 15. So laborers are working in different departments for 15 hours. They are paid 4 rupees per hour, and so total labor cost per unit. If you want to manufacture one unit, your one labor should be working in department A 4 hours, B 7 hours, C 2 hours and D 2 hours, and he will be totally working 15 hours on one unit, and so wages is 60. Chargeable expenses is 20. Analysis of the profit and loss account for the year ended is as follows. Now this is total figure, right? Because this is profit and loss account, so this is total figure. What are direct wages in department A? 12,000. What is overhead in department A? 12,000. Direct wages in department B, C, D, special stores item is 6,000 and overheads are given. So there is material 2 lakhs, direct wages, and there is the store special stores item, and this might be the chargeable expense. And there are also selling expenses of how much? 90,000. And your net profit is 40,000. It is also to be noted that the average hourly rates for all the 4 departments are similar. This we can see, right? Whether worker is working in department A, he will be getting 4 per hour. He will be getting in department B also 4 per hour, right? Because overall he is working for 15 hours at the rate of 4 per hour. Required, prepare a job cost sheet. Calculate the entire revised cost using the above figure as the base. Add 20% profit on selling price to determine the selling price. This is for a particular job. One job will, so I need to prepare a cost sheet for a job. Let us prepare cost sheet for. So let us do cost sheet for this job. Direct material is 120 per unit. Particulars. And it will be per unit cost, because job cost is given per unit. Materials per unit is 120 rupees per unit. Wages is 60 per unit. $180 will be nothing but prime cost. There is a chargeable expenses of rupees 20 plus chargeable expense rupees 20. It can be taken in prime cost also. Chargeable expenses can be taken in prime cost also, can be taken in overhead also. Alright. Finding out overhead will be somewhat typical. For this job, a worker will be working in department A for how many hours? Department A, he will be working for 4 hours. Sir, what will be wages? No, wages we have already considered. We are finding out overhead. In department B, he will be working for how many hours? 7 hours. And C and D 2 hours. Department C 2 hours and department D 2 hours. What will be overhead absorption rate? What I am finding out? Overhead. It is working in 4 departments. It should absorb 4 departments overhead. What will be overhead absorption rate for department A? First, which method should I be using to absorb the overhead? I am having only one method available. I cannot use anything else. Overhead absorb based upon direct wages, because only direct wages figures are given department wise. Is it given? Department wise. And the total figure of overhead are also given department wise. So only these 2 figures can be compared. Other no figures is available for all the 4 separate departments separately. So you will be doing this. You will be absorbing your overhead based upon direct wages. What will be department A overhead absorption rate? 12,000 divided by 12,000 multiplied by 100, which is 100%. 100% of direct wages, right? So wages also we will have to distribute. That is all right. Department B, what will be your overhead absorption rate? 6,000 divided by 8,000 multiplied by 100. 75%. Here 9,000 divided by 10,000 multiplied by 100 will be 90%, and 17,000 divided by 20,000 multiplied by 100 will be how much? 85% of wages. Alright, I will be absorbing overhead in this manner. What is wages in department A of workers? 4 into 4? What is wages per hour? 4 rupees, right? Wages per hour is 4 rupees. Is they have given? Yes. Wages per hour is 4 rupees. Sir, then we have written 60 rupees. I'll tell you how. 4 hours in department A multiplied by 4 plus 7 hours in department B multiplied by 4 plus 2 hours in department A multiplied by 4 plus 2 hours in department D multiplied by 4. The total will be 60. This is how wages are absorbed, right? Or wages is written. So this will be wages for department A multiplied by 100% is my over absorption rate. This will be wages in department B multiplied by 75% is my overhead absorption rate. These are wages in department C multiplied by 90% is overhead absorption rate. This is wages in department D multiplied by 85% is overhead absorption rate. This will be 16, 28 into 75%. 21, 8 into 90%. 7.2, 6 into 85%. 6.8. Total. Total cost per selling expense is 90,000 rupees. Now try to understand that this question is everywhere silent. They are not telling us selling expense should be absorbed on what basis. And please understand, they have absorbed selling expense based upon total cost. They have absorbed selling expense based upon total cost. What is total cost? 2 lakh plus 50,000 plus 6,000 plus 44,000, which is nothing but 3 lakhs. So they have absorbed selling expense based upon total cost. There is another way out also. Can you tell me that way out? Selling expense will be based upon percentage sales, right? Selling expenses can be based upon percentage sales, but we don't know the selling price of this job, right? We don't know selling price of this job. So sales expense, this selling expense, I will be absorbing based upon total cost. Sales expense will be absorbed based upon total cost. My selling expense is 90,000 or selling overhead is 90,000 divided by total cost is 3 lakhs. How I have found out 3 lakhs? Material, wages, other direct expenditures, and overheads multiplied by, what is the answer? 30%. So selling expenses will be 30% of total cost plus selling expenses 30% of total cost. 251 multiplied by 30%, 75.3. This will be nothing but cost of sales. 251 plus 75.3 will be 326.3. Plus profit. You desire a profit of, prepare a job cost sheet, calculate the entire revised cost using the above figures as a base, at 20% profit on selling price to determine the selling price. 20% on selling price is how much percent on cost? 25% on cost, right? 25% on cost or 20% on sales price. So 326.3 multiplied by 25%. 81.575. So selling price per job should be 326.3 plus 81.57, 407.875. This should be selling price per unit of this particular job. Let us recapitulate the question. The job is having a material cost of 120, wage cost in department A of 16 rupees, department B 28 rupees, department C 8 rupees, and department D 8 rupees, and so total wage cost per unit becomes 60 rupees. There is a direct expense given of 20 rupees. How to absorb the manufacturing overhead based upon direct wages? This will be 16 multiplied by 100%, 28 multiplied by 75%, 8 multiplied by 90%, and 8 multiplied by 85%. We found out absorption rate based upon direct wages. Selling expenses can be distributed based upon sales, but here the sales price was to be found out. Sales price was to be found out. And so we distributed selling expenditure, or the absorption rate we used for selling overhead was based upon total cost. All right, let me ask you one question. Had I absorbed the selling overhead based upon selling price, is it possible to solve the question? Or there will be a circular error as we term it in Excel? What is the absorption rate based upon selling price? I'll tell you. 90,000 is your selling expenditure. What is your sales? 4,30,000 multiplied by 100. 21.20.90 percentage. So selling overhead should be 20.90% of sales. Selling overhead. What is the good base for distributing selling overhead? Is the sales, right? It should be number of units sold. But if number of units sold is not available, it is a sales figure. So it is 20.90. Then also we could have solved it. How I will tell you. I have got total cost. What is my total cost? 251 plus the selling overhead. I get cost of sales plus profit. I get sales. How much should be selling overhead? It is 20.9. I am taking 20%. Say selling overhead is absorbed at 20%. So selling overhead should be 20% of sales. Profit should be 20% of sales. So if this is 100, this should be 20 and this should also be 20. Actually, it is 20.9 something, but I am taking it 20. Right. So if this is 20, this should be 8. And if this is 20, this should be, you can cross multiply and get all the answers. Right. But here what we are assuming, selling overhead will be absorbed based upon selling. So it is mathematically not impossible to absorb it based upon selling price, which is a more logical ratio. In book, they have solved it by absorbing the selling overhead based upon total cost, 30% of total cost. In question, they have not given anything that the selling overhead will be absorbed based upon which. Can you absorb this overhead in another rate? No. See, for absorbing the overhead, two figures are required. So department A, two figures are available only for two things, wages and overhead. So you can absorb it based upon wages only. There is no other way to absorb that particular overhead. That is this factory overhead. We are going to next one, which is 7.5. It is a recent question, so it is appearing in classwork. We have already done this one type of question. Ox Limited has an annual demand for a single customer for 60,000 COVID-19 vaccines. Annual requirement will be 60,000 vaccines. The customer prefers to order in a lot of 15,000 vaccines per order. So you will also have to manufacture 15,000 vaccines per order. The production cost of the vaccine is rupees 5,000 per vaccine. The setup cost per production run of COVID-19 vaccine is 4,800. So S is 4,800 rupees per setup. The carrying cost is rupees 12 per vaccine per month. So C will be 12 into 12. What is 12 into 12? 140. Why we have done multiplied by 12? C is carrying cost per unit per annum always. Then only we'll be getting economic batch quantity. You are required to find out the most economical production run. I am finding out most economical production run. Economical batch quantity is nothing but 2AS divided by under root 2 multiplied by 60,000 vaccines multiplied by 4,800 rupees per setup divided by 144 under root. Is it coming 2,000? 2,000 vaccines you should manufacture per run, right? You are manufacturing, so your economical batch quantity is 2,000 vaccines. Calculate the extra cost that the company incurs due to production of 15,000 vaccines in a batch. So, see, customer is purchasing vaccines, right? So he would be finding out his economical ordering quantity. And his economical ordering quantity is 15,000 vaccines. And so he wants to purchase only if you supply it in 15,000 vaccines. So what will be the extra cost? If you manufacture in economical batch quantity, you will be having setup cost. You will be having carrying cost. Sir, we will not be having purchase cost. Yes, we will be having, but it is irrelevant for decision making because it will remain same in both the case. So it is not important. What will be setup cost? Economic buying quantity is batch quantity is 2,000 vaccines. Setup cost will be 60,000 divided by 2,000 will be number of setup multiplied by 4,800. And 2,000 divided by 2 multiplied by 144. It is 2880. This is 1,44,000. This then also should be 1,44,000. This is 2,88,000. This is not a total cost. This is setup and carrying cost only. I am not finding out purchase cost because it is irrelevant. If batch quantity is 15,000 units, my setup cost will be 60,000 divided by 15. So there will be only 4 setups of 4,800 rupees per setup. It is 19,200. But as you are manufacturing more units in a setup, your carrying cost will increase. 15,000 divided by 2 multiplied by 144. It is 10 lakh 80. 19,200 plus 10 lakh 80,000. What is the answer? $10,99,000. How much your cost will increase? 10,99,200 minus 2,88,000. 8,11,200 will be increase in Let us start with this new chapter, which is single output unit costing. We'll be directly starting with questions. This is C9.1. Factory incurred the following expenditure during last year. So these are last year figures. Direct material consumed, manufacturing wages, fixed and variable manufacturing overhead. In the next year, the following changes are expected in production and cost of production. Now this is excellent. Production will increase. Production will increase, but how much they have not written? Due to recruitment of 60% more workers in the factory. How many workers are working? That also is not given. But if the workers were 100, now 160 workers will be working. And if the workers were 1000, now 1600 workers will be working. Overall efficiency will decline by 10% on account of recruitment of new workers. There will be increase of 20% in fixed overhead and 60% in variable overhead. The cost of direct material will decrease by 6%. The company desires to earn a profit of 10% on selling price. Ascertain the cost of production and selling price for next year. I am finding out selling price for next year in a chart, particulars and rupees. In next year, the following changes are expected in production and cost of production. The cost of direct material will decrease by 5%. By 6%. What was direct material cost? 12x minus 6%. This cannot be done. Direct material is a variable cost. If the production increases, direct material will increase or not? Yes. And then per unit, there is a 6% decline. So if per unit, try to understand. If 10,000 units were manufactured at the rate of rupees 10, what would be direct material cost? Rupees 1 lakh. Now the cost has decreased by 6%. So what is my new cost of raw material? 10 minus 6%. 10 minus 6%. 9.4. But it depends whether you are manufacturing same number of units or you are manufacturing more number of units. Suppose you are manufacturing 20,000 units. What will be your answer? 1,88,000, which is not 6% less of 1 lakh, right? 1 lakh minus 6% is not 1,88,000, right? So even if direct raw material cost decreases, per unit it has decreased, but you are manufacturing more. In next year, the following changes is expected. The production will increase. The only problem is increase in production is not given. How much production will increase? What do you think? I'll tell you. There is one hint given. Believe me, if this is for the first time in examination, it is impossible to take out. There is 60% increase in variable overhead. So the variable overhead is increasing by 60%. Variable overhead increases with increase in production and decreases with decrease in production, being per unit remaining same. This is the nature of variable overhead. If variable overhead is increasing by 60%, the production is also increasing by 60%. Assume. It is not always true. It always depends upon variable cost per unit also. If it is increasing, it might increase by some rupees also. Assume that 60% increase in overhead is equal to 60% increase in. Now I can find out material cost. Material will be 12x plus 60%. What is the answer? Can you tell me? 12 lakh plus 60%. 19 lakh 20,000. 19 lakh 20,000 should be cost of new raw material if the production increased by how much? 60%, right? But your raw material price has decreased. Raw material price has decreased. How much? You can, and it is overall decrease, right? So minus 6%. 18 lakh 4,800. I am going to direct wages. Production will increase due to recruitment of 60% more workers in the factory. Alright. So I am finding out wages. What was previous wage cost? 7 lakhs plus 60%. See, when I was solving this question, I thought it should be this. 7 lakh. Is your production increased? Yes. By how much percentage? 60%. So wage cost should increase by 60%. Right? So plus 60%. Are your number of workers increasing? Yes. And how much number of workers are also increasing? 60%. So plus 60%. Is this not correct? It is a variable cost. 60% production increases, so 60% cost will increase. And number of workers are also increasing. So you will have to pay them wages also. Then it is not plus 60% more. It is incorrect, obviously, because it is not given in the answer. I thought it. I thought it. Yes? Exactly. This both are the same thing. 60% number of workers has increased, so only your production has increased. So when you add this 60%, you are adding wages of that 60% more. Is it right? And because of that, your production has increased. Even if number of workers has increased by 40% and production has increased by 60%, then also you should add plus 60% to add the wages. So it is 7 lakh plus 60%. But because of increase in number of workers, the efficiency has declined by 10% because of new workers were recruited. What does this mean? First, a person was taking say 60 minutes to manufacture one unit. Now he is taking 66 minutes to manufacture one unit. His efficiency has decreased by 10%. If efficiency decreases, wage cost increases or not? If efficiency decreases, wage cost increases or not? Yes, wage cost increases and it will increase by 10%. You see decrease in efficiency, then also I am writing plus. Decrease in efficiency is increase in cost plus 10%. What is the answer? 12 lakh 32,000. They want just idea of total cost, so I am not preparing a cost statement giving them fixed and variable. Manufacturing overhead, there will be increase in 20% in fixed overhead. Fixed overhead 3,60,000 plus 20%. It is 4,32,000. And variable overhead is increasing by 60%. From that only we assume that it is production is increasing by 60%. So 2,50,000. Because the production has increased by 60%, the cost will increase by 60%. Which is 4 lakhs. Total cost will be total of this 18 lakh 4,800 plus 12 lakh 32,000 plus 4 lakh 32,000 plus 4 lakhs. 38 lakh 68,800. Plus desired profit. There is some profit margin. Ascertain the cost of the production selling price. The company desires to earn 10% on selling price. So selling price 100. This will be 10. This will be 90. You can do the cross multiplication. 38, 68, 800 multiplied by 10 divided by 90. 4,29,866. Total will be 38,68,800 plus 4,29,867. 42,98,667. This is what is asked in the question. I'm giving you one work. I seriously doubt this calculation. If the efficiency decreases by 10%, it results into increase in cost. But I don't feel it is exactly 10%. All right. So try to understand. If 100 units were manufactured first, all right, in say a particular cost, now 160 units are manufactured. Your efficiency was 100%. Your efficiency would be 90% only? Yes, all right. Then your wages will not increase exactly by 10%. I want you to work on it and tell me what can be the alternative answer. But at this level in examination, if you don't go deep, you can assume that decrease in efficiency of 10% will result into increase in wage cost by 10%. The 60% will always increase, right? But this 10%, we are just assuming that there is a decrease in efficiency of 10%, which will result into increase in cost by 10%. So in our classes, one of the faculty's efficiency decreased as far as time was concerned. What does it mean? He finished something in 1.5 hours rather than 1 hour. So his efficiency is say decreased by 50%. I can say that 1 hour, 1.5 hours. So his efficiency has decreased. Why it has not increased? If he takes more number of hours, his the efficiency has decreased. We will have to pay him more. Now we will be paying, his efficiency has decreased by 50%. So my cost will increase by 50%. This remains same. I want the answer how the cost differs by this. We'll discuss it in next lecture if you are having the answer. We are going to first 9.3. See 9.3. A re-roller produces 400 metric ton of MS bars, spending rupees 36 lakhs towards material and 6,20,000 towards the rolling charges. 10% of the output was found to be defective, which had to be sold at 10% less than the price for the goods production. If the sales realization should give the firm an overall profit of 12.5% on cost, find the selling price per metric ton of both the categories of bars. So there are defective bars and there are some good bars. The scrap arising due to rolling process fetches rupees 60,000. Let me first draw statement for cost. A re-roller producing 400 metric tons. So 400 metric tons is manufactured by spending 36 lakhs towards material. So material is 36 lakhs rupees and 6,20,000. There might be some processing. Rolling charges is nothing but processing charges or manufacturing cost, which is 6,20,000. Total cost will be 42,20,000 minus scrap value. When you do this rolling, you are having some scrap which can be sold at rupees 60,000. And this scrap is not your original metric ton. You are manufacturing 400 metric ton. It is some byproduct which is manufactured as scrap, which is rupees 60,000. We all know scrap arising during the process should be reduced from cost of production. It reduces the cost. 42,20,000 minus 60,000. That is 41,60,000. Is my total cost. I want some profit on it. It is 12.5% on cost. 41,60,000 multiplied by 12.5%. 5,20,000. This is 46 lakh 80,000 rupees. I want sales value from 400 metric ton. Now, when we produce 400 metric ton, 10% of the output will be defective. So 10% will be defective, which will be 40 metric ton in our case, which had to be sold at 10% less than the price for the goods produced. How much will be good metric ton manufactured? Will be 360 metric ton. You need to find out selling price per metric ton. Defective pieces, you give it in scrap or you sell it at only how much percentage less selling price? 10% less selling price. Sir, but what is the selling price? It is very simple. Suppose a good selling price is X. So from this, you will be getting 360X, and defective selling price is Y. Then you will never be getting the answer. All right. What is defective selling price? 10% less than the price of production. So defective selling price will be 0.9x. So how much total sales you will be getting? 36x and 360x. The total sales you will be getting is 360 plus 36. 396. Your total sales will be 396x and you want 46 lakh 80,000 as your sales value. So x will be is equal to 46 lakh 80,000 divided by 396. 11,818 per metric ton of good units. For defective, selling price per metric ton will be 11,818 multiplied by 0.90. $10,636. So you will be manufacturing 400 tons, out of which 40 tons you will be selling it at 10,636 rupees per metric ton, and remaining 360 you will be selling at 11,818 rupees per metric ton, and overall you will be getting 12.5% profit on your cost. We are going to 9.4. Popeye Company is a metal and wood cutting manufacturer selling products to home construction market. Consider following data for the month of October. Now this question is of November 2004, but I thought that it is good question to grab knowledge of costing. So it is metal and wood cutting manufacturer selling products to home construction market. So you need to understand the business. Sandpaper might be material for them. material handling cost, lubricant coolant cost, miscellaneous indirect manufacturing labor, direct manufacturing labor, direct material opening and closing is given, finished goods opening and closing is given, WIP opening and closing is given, plant leasing cost, depreciation plant and equipment, property taxes and plant equipment, fire insurance on plant equipment, direct material purchase, sales revenue, marketing promotions, marketing salaries, distribution cost, customer service cost. Prepare an income statement. We cannot prepare because sales is not given. We will be preparing cost statement. Sales is given? Yes, sales is given. We can prepare income statement. Supporting schedule of cost of goods manufactured. For all manufacturing items, indicate by V or F whether each is basically a variable cost or a fixed cost, where the cost object is a product unit. So for each cost, you will have to say whether it is variable or fixed. If it is selling, then you will not have to say it is variable or fixed. But for all the cost, you will have to say whether it is variable or fixed. So we are solving this question first by preparing a cost sheet. So it will be particulars and rupees. Let us keep a small column for writing down whether it is fixed or variable. Let us solve this. First, I am segregating all the cost. Sandpaper for this company is a metal and wood cutting manufacturer. Sandpaper is not a direct raw material. It is again a factory overhead. It is indirect material. Material handling cost is factory overhead. Lubricants and coolants is the factory overhead. Miscellaneous indirect labor, factory overhead. Direct manufacturing labor is included in direct cost. Direct material, finished good, WIP, that is all right. Plant leasing cost, it is a factory overhead. Depreciation on plant equipment, factory overhead. Property tax on plant equipment, factory overhead. Fire insurance on plant equipment, factory overhead. Direct materials purchased, this will come in material. Sales revenue, marketing and promotion is selling overhead. Marketing salaries are selling overhead, distribution cost selling overhead, and customer service cost selling overhead. We will be drawing cost sheet starting with materials. Materials in cost sheet we write down purchase or consume? Consume. It is opening plus purchase minus closing. Opening is 1 lakh. I will be tick marking it in my book so that I understand that I have copied it. 1 lakh plus purchase is 11 lakh 50,000 minus closing is 1 lakh 25,000. 11 lakh 20. Help me out. Fixed or variable? Raw material is variable. Direct manufacturing labor 7 lakh 50,000. Direct wages 7 lakh 50,000 will be variable. And there was some direct cost also. Direct manufacturing labor all right, let make this as a prime cost. Which is 18 lakh 70 plus factory overhead. So I'll have to just copy it down wherever I have written factory overhead 1, 2, 3, 4, 5, 6 and 7. Sandpaper 5,000. Sandpaper 5,000. Material handling cost 1,75,000. Lubricants and coolants 12,500. Miscellaneous indirect manufacturing labor 1 lakh. Plant leasing cost 1,35,000. Depreciation 90,000. Property tax on plant and equipment 10,000. Fire insurance 7,500. I will be getting work cost. But I will have to determine whether it is fixed or variable. Sandpaper will be variable, right? If you manufacture more, you will be requiring more. If you manufacture less, you will be requiring less. Material handling cost will be variable. Lubricant and coolants will be variable. Indirect manufacturing labor may be fixed, may be variable. It depends upon how you have hired them, right? Normally, we can write down if it is labor, it is variable. Plant leasing cost, rent, fixed. Depreciation, fixed. Can depreciation be variable? Yes, if you are charging depreciation based upon number of hours machine is working. There is one method, right? Where you charge the depreciation by number of hours machine is working. But as a good accountant, you should always remember depreciation is incurred even if machine is ideal, right? So it should be treated as normally fixed. Property tax will be fixed, fire insurance will be fixed. It will not change if you change your unit of production. I want answer of work cost. 24 lakh 10,000 plus opening WIP. All right, I'll not be able to do it in the same page, so I'll have to copy it in another page. Plus opening WIP minus closing WIP, I will be getting cost of production. Opening WIP is 25,000 and closing is 35,000. 25,000, closing is 35,000. So it will be 20. What is my total cost? Cost of production is 24 lakhs. After cost of production, I add opening stock of finished goods less closing stock of finished goods. I will be getting COGS. See, in opening stock, closing stock, whenever you are adding and subtracting, you don't have to tell whether it is fixed or variable because it is not in the nature of the cost. It is 2,50,000, 3,75,000. 2,50,000 minus 3,70,000. 1,25,000. This is 22,70,000. There are selling overhead which will be added. You will have to tell them fixed or variable. Marketing promotions 1,50,000. Marketing salaries 2,50,000. Distribution cost 1,75,000. Customer service cost 2,50,000. I will be getting answer of cost of for all manufacturing items indicate by variable or fixed where the cost object is a product unit. So whenever you are finding out cost of manufacturing a goods, segregate them between fixed and variable. Selling overhead is just not required. Even if it was required, you can distribute it into fixed and variable. Marketing promotion is variable. Salaries can be treated as fixed. Distribution cost is variable. Customer service cost is also variable. What is cost of sales? 31. And I think sales figure is given, which is 34 lakhs. So my profit will be 3 lakhs. This is nothing but an income statement.